So AI is everywhere in the news, and with it comes companies touting how their offerings meet the moment with buzzwords like generative AI and enterprise AI solutions. C3.ai is no exception to this. So you might be thinking, should I go in? Especially if you feel like you've missed the boat with NVIDIA and you don't want to miss the next AI train. But the question is it really the company it's touted up to be? Do the metrics of C3.ai meet its valuation, or is there something else going on beyond the surface? In my opinion, there is something going on beyond the surface, and it's a huge fucking iceberg. So let's dive in and see what's going on. For this video, I'm going to be focusing on questionable accounting choices as well as a lack of organic growth. So if you're to look at C3.ai's holdings, a name that you're gonna see come up a lot is Baker Hughes, and you can't talk about C3.ai without talking about Baker Hughes. So who is Baker Hughes? Baker Hughes is one of the largest oil field service companies, and they currently have a joint venture with C3.ai, which was announced in 2019. So they have a joint venture, and they also purchased a large stake in C3.ai as well. So they started off with about 10 million shares, and they've sold some. They now have a little under 7 million shares of C3.ai with a stock price of around 36, 37 for C3.ai. That is about a 250 million stake that Baker Hughes has right now in C3.ai. So with that stake, it's clear to see that Baker Hughes has a vested interest to see C3.ai succeed. Looking at Baker Hughes' most recent filing, March 2023, we can see that they had income before taxes of $760. And if you do income before interest and taxes, that's 760 plus the 64 gets you 824. On their filings as well, you see a line 386 of other non-operating income. And if you go further down into their filing, they explained that 181 million of other non-operating income came from C3.ai. So that's a huge number. It equates to over 20% of EBIT for the quarter for Baker Hughes. And that lets you know what kind of impact C3.ai can have on the overall profitability for the company. With that in mind, let's take a look into C3.ai's financials. All right, so here I put together some charts based on the financials from C3.ai. The first thing that sort of stands out is the large increase in the accounts receivables. So if you take a look, you're going to see Baker Hughes come up a lot. They refer to Baker Hughes in their financials often as a related party. And if you're to look at just revenue from Baker Hughes and AR from Baker Hughes, you'll see that revenue for the past few quarters, there hasn't been a significant change. It decreased a bit and has gone back up, but has stayed relatively close to 25,000, a little bit under in July and October. But if you're to look at the accounts receivables from Baker Hughes, you can see a massive increase occurring starting from July 2022, quarter after quarter. But what you don't see is a corresponding increase in revenue. Revenue, like I said, stays pretty stagnant. And I've separated out, if you are looking at non-Baker Hughes revenue and their receivables as well, you can see as well that that's been pretty stagnant, staying around 40 million a quarter. And we do see a bit of an increase as well of AR relative to sales. It's not great, doesn't stand out as much compared to Baker Hughes revenue and AR relations, but it's still not great that we're seeing that too. We're seeing a pretty big increase in AR from non-Baker Hughes customers, but we're not really seeing that correspond to and translate into revenue for the company. All right, so the next one I'm going to go into is the unbilled receivables. So if we're to take a look at the unbilled receivables, so here's a chart. So in red, we have the unbilled AR, and in blue, if you go from the blue line all the way down, that's going to be the total receivables billed and unbilled. We can see that the unbilled receivables has been massively increasing quarter after quarter. And keep in mind, unbilled receivables is AR that you're saying that you've earned, but you haven't invoiced yet. So this is a huge number. This is a huge increase we're seeing. And this, a lot of people could say, points to unsustainable or very aggressive accounting techniques. So I put this next chart together. In red, we have the accounts receivable that is from Baker Hughes. So from blue all the way down, we have the total accounts receivable. So we can see a lot of that increase in the accounts receivables that we were talking about before. A lot of that is unbilled. and a lot of that is coming from Baker Hughes. And you can see that inflection point, July 2022, that they're really kicking up in with their billing practices here. All right, so now we can take a look at Baker Hughes revenue compared to C3.ai, just total revenue in general. So we can see that revenue drop in July 2022, and then it starts to increase back up again. And remember, July 2022 was that inflection point as well when AR started to balloon. So another point too that's interesting, a large chunk of the revenue is coming from non-Baker Hughes companies, yet the majority of the AR comes from Baker Hughes. That doesn't quite align for me. If the majority of your AR is coming from Baker Hughes, shouldn't the majority of your revenue be coming from them as well? So yeah, could this AR be fictitious? And I'm not saying that it is. Like I said, this is my interpretation. I don't work at C3.ai. I don't work at Baker Hughes. This is just questions that I have based on looking at the financials and that others have as well. Carousel Capital wrote their short report with questions, and I'd recommend you check that out as well and make your own conclusions. So everything here that we're discussing is just questions. Make your own conclusions from it as you will. The last chart that I have here too is the AR turnover. So we can see AR turnover is massively decreasing, and since the AR is mostly from Baker Hughes, we know that Baker Hughes is driving that trend. And importantly too, we know that a deterioration in the AR turnover can point to either questionable accounting practices or a deteriorating business. So now that we've talked about Baker Hughes, that relation there, the unbilled receivables, now I want to get into some of the customer concentration. That prior talk is going to give context into what they're saying about customer concentration. In their filings, they say that they exclude unbilled receivables for the purpose of calculating customer concentration. And so I want you to think about why they would do that too, right? So we know that unbilled receivables is the majority of their receivables, and the majority of it comes from Baker Hughes. So by excluding it, it makes it seem that their customer concentration isn't as high. And we can see too, when they're talking about the AR concentration, they just say two separate customer entities accounted for 22 and 18% respectively for accounts receivable as of January 2023. So yeah, that doesn't seem like it's too much, but I want you to think about too the amount that C3.ai has in Baker Hughes unbilled accounts receivable and what that number could be when you readjust for that. Something else too that relates to their customer concentration or customer count is just the general definition of it. In January 2022, they changed the definition of what they consider a customer. And one should think that the definition of a customer should be pretty straightforward, right? But for C3.ai, they seem to be having some trouble with it, that they've now changed it twice. So they changed it January 2022 and they changed it for the most recent quarter, April 2023. In 2022, when they changed it, they said their prior definition didn't encompass things that they were already including, meaning customers that use C3.ai and sell those products to end users and software/services sold under a reseller agreement. In April 2023, when they changed it, they made it more broad again. They referenced the same reasons really as January 2022, with the addition of referencing the complexity of their contractual and pricing structures as to why they're changing the definition of who a customer is to C3.ai. So something else too when it comes to customer counts is that when you're looking at the definition, that they count a customer as a distinct division, department, business unit, or group within a customer entity that uses their product. So that is pretty broad. So if you think about it, a customer within a customer entity, if they're saying that it could be a division or the department, so that could mean that an HR department uses their product and the accounting department uses their product too, and that it's defined as two separate customers. To me, that's quite broad of a definition and could be construed as being a little misleading. So that's what I wanted to go over today about C3.ai, but there are some other interesting things that are going on in the financials and the company and their offerings in general. So yeah, look forward to some more videos on that as well. Thanks guys. Bye. Oh, don't forget, like, comment, subscribe.